All right, guys. Sam back with one last video for the day. And I thought I would just kind of offer you some more evidence of this methodology and my continued suggestion to you that it does not matter what market we're looking at or what time frame we're looking at. And I want to show you this is the yen today. So I'm using this because if you read any of the financial media or you're in touch or getting exposed to any of the financial news today, you know that there was a big move in the dollar, particularly against the yen. And so, I always want to encourage you, if you see something like that, to go in and see if you can apply this to a market where there's been volatility and see if you can make sense of it, see if you can find how the algos are trading it, where the important pivots are, and how you might have traded it, both historically as well as if you were just approaching it today for the first time. So again, I know you guys are primarily crypto traders, but I'm here just to do this just to demonstrate to you that it doesn't matter what the market is. It's the same thing happening. If there are algorithms that are in there trading it, they are using the same technique. There are algos that are written to follow this, and they will continue to be there for the foreseeable future until they're not. But at this point in time, I propose to you this is simply the best way to approach the market. So here, this is an 8-hour of the dollar yen, the Forex pair. So here's the spot contract. So when you first look at this, I would propose to you that there's really not any very clear Elliott count. And so back to my premise that if it's not just screaming and staring at you right in the face, if you can't help but see it, then you don't need it. And there's no reason to try and force some sort of count here to feed your own ego about how good you are at figuring out what the count is. I don't really care. If it's there and it's easy, I'll use it. If it's not, I don't need it. So just to kind of break this down and look back a little bit historically, you'll see there's been a lot of opportunity here. There's been certainly some periods where you would have been stopped out. Hey, I'm not implying that this is perfect. Perfection is unattainable in the markets. You're going to get stopped out regularly. Your ability to continue to pull the trigger is really what I'm trying to do, is build your confidence that a stop just means you've got the swings wrong or the pivots aren't in yet, but you've got to continue to pull the fibs, look for the opportunity, make sure reward compensates you for taking the risk, and just continue to trade away. And over time, with a solid methodology like this that's proven to be profitable, you will in turn be profitable yourselves. Doesn't matter what market you're trading. So let's take a look at this. So here you can see this big action that we had today. So if I were first approaching this market, again, I don't want any oscillator confusion here. I just want to see price. So, of course, the first thing I'd do is pull from the lowest low that I can see and the highest high. So that's a pretty enormous range that we've been in. Enormous. We're going back to June 23rd of 16. So over this period of time, we've got a huge range. So despite the fact that we have this huge range, look at where we find support. Look how precise that is. Right? So we get through a little bit here, we bounce, we can't get back, we come right to the 50 again. Now we've gotten through, and then we see this big reaction today. So, of course, it's likely that we would not be trading off of an 8-hour chart. It's worth looking at the big picture, but more than likely we're down in the 4 or the 1 hour and maybe fine-tuning on a 15 only for precision entry. But if I were looking at this, I'm going to take this off and we'll revisit that later. But we can see that there's been there was a lot of chop back here, and of course the dollar yen is very news driven. It's very interest rate sensitive. It's very Fed speak sensitive. So we can see that there have been some pivots here that may be meaningful. So the first one I would look at is, as we're basing out here in this low range here, here's the last swing before we start up. I would pull here, take a look at it, see, again, I'm looking for pivots the algos are working from. So if we look here, we can see we come down, we hit the 50, we scream up, we get to that double top, but then the market comes screaming down. So clearly there's some news event. And if you were trading that, and So of course, if you're trading this and you're long at the 50 and you've gotten this nice profit here, at the very least, I'd like to think that your stop is to break even. So if you were riding that, while of course it's discouraging to see profit be given away and take a stop at break even because you were looking for that 23, it doesn't happen. You get a news event that stops you out before you get to the 23. Interestingly, where does it go? In extremes, particularly in the Forex markets, it's very precise. It's very algo driven. So you will see the 786 play a significant role in Forex. It's kind of a last stand before the market craters or takes off. So in this case, we hit the 50, we're up, we double top at the previous high, down to the 786, and then we go into this insane rip. Again, my purpose here is not to talk about why that happened, but looking at could we have traded it. And within here, there are almost no pullbacks that we could have traded, at least not on this time frame. So what I would start doing, I mean, there's just nothing here. This is just a straight rip up. So the last swing low that we've got here gives us some idea. Now, as we start to come down, of course, there's always the opportunity on the other side of the market. So if we're over here and we've just got this raging bull, the last few opportunities that we have to have been trading from the long side, really, there's almost no pullback here. So maybe you could make a case, because of the size of the market here, that this was an opportunity. We wicked the 50, double top, back to the 50 for a retest off to the 23. There's the new high. We come back. We don't get there. It's so strong. We just continue to go. Now we're pulling from the last significant low. Here's the first clues that we're starting to change trend. So we come down, 50 is tapped, we react, we come down to the 618. You should expect a reaction there. We come back up, we can't get the new high. So we have the potential now for a trend change, and market starts to come back down and takes out the 618. So now we're flipping. We're to the other side. So we've got a swing high here, and we start to come down. So let's work from that swing high, see what we can see. Well, the first one, if you were shorting it with a stop above the 618, you're stopped out. Comes back down. If we pulled it again, well, you'd likely go from this low to the 38, We don't get to the 50. We don't get its front run, and we come down to the to the negative 23. All right, so now we've got a new low. We come back up. We're a few pips from the 50. We come back down. We don't get the 23. We don't get it yet. So I would continue to pull to new lows. We come back up. A few pips from the 50. We come back down. We don't get the 23. We don't get it. So at this point, you've got to be expecting that algos haven't gotten their targets yet. So until we break the 618, this is still most likely the pivots. These are the pivots the algos are working from. We've gone to the 50, didn't get the target, back up, didn't get it, back up. We're pushing up into this resistance. We're not getting through the 618. Then we're back down. Now we get it. Now that's a long time. All right, now we're into March of 17. So, as to whether or not you'd be trading this time frame is really not my point. I'm just trying to demonstrate to you that it's a constant puzzle of pulling for the fibs that the algos are working off of and then bringing it down to lower time frames because it's happening on multiple time frames. There are algos for every time frame, but you can see it in the bigger picture here. And my proposition to you is that by trading from higher time frames, you're less vulnerable to the noise that can certainly influence the Forex market, where you have high volatility, but the dominant trend is maintained because of where the fibs are pulled from. So if we look here, this continues down. So clearly we get here. Now we've got profit taking. So we've got a new swing that we can start pulling from. So I'm going to go to this low. There's our high. We don't get there. We don't get there. They front run it at the 382. We come down. You could make the case that there was an opportunity right here. They get through. Yes, nothing's perfect. They get through by several pips. They get through fairly well here. So if you were shorting it, high probability you got stopped out. But of course it rips back down, and look where we head. We get to the 23, we stall to the negative 618, and we get just a few pips away from the negative 100. So at this point, now we know, again, we've got some things to work with. So we've got some meaningful swings that we can pull from. So if we're looking from swing to swing, here we come up, we tick the 618, we head back down, we don't get our target. Now we're through the 618. So at this point, we want to check back to this prior swing high and see if they're working through an all the way halfway back, or 618. All the way halfway back is wicked. The 200 is providing some resistance there, but we don't go down. We continue to move higher. So you'd want to, at the very least, check the all the way halfway back. Now, take note. See, this is my point here and why I wanted to show this to you. It's a constant puzzle to find out where the algos are working from. Which pivots are they using? So in this case, we've got clear evidence here that there are a group of traders and algos that are written that are maintaining that negative bias despite the fact that we've had all of this up movement. Right, that there are larger algos trading on a larger time frame, I should say, that are working from those pivots. Right? Did it pay for them? Well, at this point, right, so clearly if, again, I'm not saying you'd be trading off of an 8-hour, but clearly there's evidence here that the market's moving lower. So I'm going to take this off. And we'll work from now this swing pivot. Do we get one right here? Yeah, right to the 618, all the way through. So we got to draw to new lows. We don't get quite to the 50 here, come right down to the 23. So you see this, when they really want it, they'll front run it. The 200 is providing some resistance here. Can't quite get to the 50, but we go right to the target. So we know that's a meaningful pivot as well. We're going to come down here, swing. One more time. Now we're seeing signs of strength here because we've gotten on the other side of the 200 period. We've gotten on the other side of the 50, the other side of the 618. So at that point, we want to confirm that indeed the market has moved to a bullish bias. So we can't say for sure. We can go to the lowest low, look at this and say, well, if you were trading that here, you're stopped out. You're likely stopped out. The last thing we would check is the all the way back. And once again, right, look at how we double top here. They can't get it through the 618. Can't get it through. Right? So the longer term algos that are using this swing high, the highest high to the lowest low, that's significant. That's not coincidental, is my point. They can't get it through. Back down we go. Back down we go. And that's where we've been. So let's take this down just for fun, just to continue to make this point for you. Let's look at this last swing down where we could approach it on a time frame that we might be able to trade. 4-hour is my suggestion for Forex. You're not as vulnerable to the noise that you're likely to get. Let's assume we don't know what's coming. So we're here, we're working from this swing high. Down we go to a low. Well, the first low actually is right here. So we wick the 50, come down, we go through the 23, we hit the negative 200. So, but certainly a nice trade. This is a 4-hour chart, so that's a nice trade. So we know that we've got some meaning here, that this is a pivot that algos are using. So I'm going to pull here, I'm going to pull down, wick it right there. We don't get to the 50, we keep going. 382, we don't get to the 50, down to this low. Now we get to the 50. Right, so there's your trade. So that's the swing. We know algos are working from that because of the evidence here that they wick the 50 and then they turn down, they go right to the negative 23. Right? And you probably had another trade here as well. Right? So now we're through it. Now we've got another swing pivot that we can work from. I'm going to take this off just so we don't clutter the chart. Now we've got a swing here through the 618. Just barely. Gets through by a few pips, right down to the 23, then right to the 618, almost to the tick. Pull to the new low. Okay, we know this is a meaningful pivot. We come up, we don't make the 50. We don't get the 23. We're back up. We tick the 50. Down we go. Where do we end up? We're through the 23. We come back up, retest. There's the 200 period. We retest the 50. Down to the negative 618. Beautiful. So pulling again. Take a look here. Just barely, it's just stop running. Right? We're getting barely through. Running the stops. They can't get it through. Can't get it through the 200 period. Can't get it through. Down we go. Now in here, of course, there's trades. We know this is significant. 50, 23, negative 618. We're through it. New low. Up to the 50. Can't get to the 23. Can't get there. Now, look at that. Now we're through the 618. Possibly a trend change. Possibly. So, at the very least, we'd be pulling here. Looking at that, we go up. Look how we wick it. We touch the 618, and then we get through it. We're through the 786. Change of trend. All we know to do is that now we're on the other side of the 200. We've had this major reaction, so we're going to draw from the low. There's our pivot. What do we do? Now, interesting. So we hit the 50, we pop up a little bit, we hit the 618, we pop up a little bit, we go back down. So if you're in that, and again, look how we get a reaction. You almost always get a reaction off of it. We get a reaction. There's a group of traders that are going to defend the 50. They push it up, can't get there. It's too weak. They get to the 618, push it up, can't get there. But each of that always creates an opportunity if you get off here. Remember, this is a 4-hour chart, so these are not inconsequential movements. That's from 0926 to 0950. So there's 25 pips there. So there's a reasonable place for you to tighten up a stop. At least reduce the exposure. At least reduce it. Breaks it. Are we going down? If we got stopped out, we're just drawn to new lows. We can't quite get there. Did we pull it from here? Just shy of the 50, down to the 23. There's a little profit taking there, and then we had a little shy of the 618. Now we're screaming higher. Right? That's the reaction we had. So from here, we can make the case that from that high, now we've got a new low. Well, look what we've done today. We've gone up to the 618. We've got through it. The wicks have gotten through it, but we're not completely through the body yet. So we close right there. It will be interesting to see where we go next, because you can make the case that back to the prior pivot, there could be algos pulling from that we're still under the 618 and may turn back down. Do the oscillators help? Well, maybe for some timing. This would imply that we're not done here. This would imply that we're not done. You know, maybe we see a little pop up. Maybe we're to the 786. We just don't know. All we know is if we get through it and it looks impulsive, then we're going to start drawing from the other side. That's all we know. If we get through it, we pull from here. We look for an opportunity to enter down here at this 50. All right, I think I'm making the point. Okay, guys, that's it for now.